Welcome back to Cheddar, everyone. Joining us now is Fred McClimans, analyst at Futurum Research, which is focused on the digital future of tech and people. He's also head of research at Samadhi Partners. Many consider, of course, this to be a make or break quarter for Snap, missing on nearly all angles. So, Fred, do you think that Snap is a broken company, or is it just a broken quarter?
Oh, that's a great question. And I think there are two different ways that we can look at that. On the one hand, I've got a lot of respect for Snap, what they've achieved, the software that they've developed, and probably equally important, the impact that they've had in the market. They really have been a trendsetter there. So, as a company, as an offering, as a technology or a service, I think they're doing fairly well there, certainly leading everybody else, even if everybody else catches up quickly. But as an investment, that's where things really start to fall apart. I think they were overvalued at the IPO, something that we've written about in the past. There are a number of concerns that we have fundamentally with the business itself, and they really haven't done anything to address that. So now we're looking at 2 quarters in. We're looking at declining growth rates across the board. The one possible exception being they did increase North American users a little bit better than expected, but across the board, everywhere else, it's a business that just simply is not growing and is constrained by its niche.
Okay, so what needs to change, Fred, in order to turn these shares around?
That's a really difficult question, to answer here, because the fundamentals of the business itself just don't match up with the way the company went public and the offering. Overpriced, we think considerably overpriced for the size of business, and then the lack of voting rights for users. I think last week we talked about the rumors around Google. Could they have actually made an offer for Snap back in 2016, and then even perhaps another offer, right before the IPO? That's almost meaningless. In fact, I think that does more to show the dark side of Snap, because there's very little chance of investors actually being able to force some type of a deal to get money out of the company, and that's a problem.
Fred, Evan Spiegel talked a lot about the idea of empowering creativity and talked a lot about cameras on the call last night. What specifically do you think in terms of strategy does the company need to do in order to make this not a niche product anymore? And maybe if you can't answer that question any further, do you think the company is even willing to experiment and try new things and try to make this not a niche product?
Well, first off, I do believe that there are things the company can do. Moving into the hardware space may or may not be the right move for this. I mean, if you look at the Snapticals sales, declined, this quarter. In fact, just kind of looking at that for a second, the idea of having AR glasses, that's a great idea. And they seem to be doing that well within their limited niche space. But when it comes to larger mass market commercialization, somebody like Google, they're going to walk all over Snap in the larger business market. And it's the business market that people are really investing in here. The bigger issue here is that Snap really is a software company. And unfortunately, the way the trends are going right now, software is something that very often starts as a really interesting product, as in the case of Snapchat, but very quickly becomes a feature because there's a very low barrier to entry. So with Snap, what they really need to do is, first off, do what they're doing now to really control that core user base. They can't afford to lose anybody in that 17 to 24 demographic, and they do need to start to expand into that 25 to 34 demographic very quickly, or they're forever going to be sort of limited to this size here. But in terms of hardware, the Snapticals glasses, they're not really taking off that strong. We look at some of the rumors about Snap potentially buying a drone manufacturer to get access to that personal aircraft around your space when you're having a good time and snapping away. I'm not sure that really addresses the issue there. I think the one thing that they can do and are doing is content. They're doing content very well. They've doubled the number of shows. The engagement for their shows and original content is up. And I do believe that unlike Instagram, WhatsApp, Messenger, and others out there, even Twitter, I do believe that the information needs of that 17 to 24 demographic are fundamentally different from those in the larger mass market. And I'm really excited to see them going after that as aggressively as they are.
Fred, there's already been talk, or the news was broken earlier this week, that Google had offered $30 billion for Snap as early as a year ago. Do you think with this new depressed valuation compared to that and compared to where the company went public that talks of a buyout might reemerge, that this is something that Snap may now seriously consider if it hadn't done so already?
Well, certainly at this point, I think that investors and certainly the larger shareholders in the business have to be looking at that as an option. Is there a way to bring somebody like Google back to the table? Realistically, though, I'm not sure that Google or anybody would pay $30 billion for this company right now. You've got no activist investor capability within the firm. There's no way that anybody on the shareholder side can really force a sale. So it really comes down to, the Spiegel, his management team, and some of their, larger investors over time to make that decision that, yeah, now is a good time to sell. But, quite frankly, the performance of the company, the growth of the company, unlike a lot of other firms, is really not that strongly tied to its share price. I mean, yeah, last night in about 15 minutes, they dropped $1.5 billion, almost $2 billion in market cap. But again, without that ability for investors to pressure the firm, it doesn't really make a lot of impact inside the boardroom. And I think we've seen that in some of the attitudes from the company.
Fred, Evan Spiegel on the earnings call last night talked a lot about growth in the developed world. He said that 25% of all smartphone owners in the US, in the UK, and in France use Snapchat every single day, which was pretty mind-blowing to hear. Do you think the company needs to think about the developing market differently, though? I mean, do you think that they need to pay attention to the developing world and really push growth there as an opportunity?
Well, long term, they certainly have to be able to expand into the rest of the world. That's going to be critical, for Snap or for any business that's really trying to achieve that global scale. In the short term, however, they've got to find a way to monetize the existing users that they have and really not lose any of that core base. Right now, we see, WhatsApp, we see Instagram outpacing the growth of Snap. And the more that takes place, the less market opportunity there is for Snap in the core market. So long term, absolutely, they've got to have a plan in place, and they've got to be willing to address, some of the cultural and bandwidth issues that exist around the world. But short term, right now, it really has to be about, focusing on that existing user community. And that was one of the positives that we saw the uptick in North American, average daily users. That was good, or daily average users for that.
Fred, what do you think is the right value for Snap shares right now?
Oh, far be it for me to set the valuation of a company, but I think the market is doing a pretty good job of that, bringing it back into a reasonable level. Recognizing that there are two paths that are likely options for Snap at this point. If they right the ship and they can find a way to double, triple, even quadruple the average revenue per user to get close to a Facebook type of operation, yeah, the valuation they have now could be justified long term. On the other hand, if they remain in this niche and it becomes much more of a lifestyle company for both the company and its users, I think they're overvalued at this point. They're trading very high. And not to take anything away from from the company itself, but from a valuation perspective, even at this valuation, we're not interested in the business.
Snap has certainly been a leader in augmented reality. And on the call last night, Spiegel talked about the dancing hot dog. He said it's most likely the world's first augmented reality superstar, and it was viewed over 1.5 billion times in snaps created by our community. How important do you think augmented reality is to monetization of Snap and user growth? Because that's something that it doesn't seem Instagram has quite copied yet, though we all know it could.
Right. So, let's break this down into two different points here. The first, I think augmented reality to both the consumer world and the business world, has probably as much potential for revenue generation and for changing behavior as any other application out there today, short of AI. And in fact, I think a lot of the AR will be driven by the work that's taking place in the AI space right now. So the potential there is very high. We can see this being monetized in just about every use case out there, whether it's entertainment, whether it's social sharing, whether it's business collaboration, take your pick, medical, discovery, science. The applications are there. The problem is that they're not there for Snap. Snap is still very focused on that lifestyle type consumer and in that younger demographic. So the monetization of that, I think, becomes increasingly difficult for Snap. Yes, Instagram isn't there yet today, but when Facebook and others really start to weigh in heavy into that space, and I would even include Apple in that mix for players that are going after the AR market. I think what Snap will find is that the real business application, the real large mass market money, is not something that they can touch at this point.
All right, Fred McClimans, analyst at Futurum Research and head of research at Samadhi Partners. Thank you for joining us.
Thank you.